Most traders think that market structure is just higher highs and lower lows. It's not. Structure, in fact, let us start with Wikipedia. Market structure in economics depicts how firms are differentiated and categorized based on types of goods they sell, homogeneous and heterogeneous, and how their operations are affected by external factors and elements. Market structure makes it easier to understand the characteristics of diverse markets. The main body of markets is composed of suppliers and demanders. Both parties are equally indispensable. The market structure determines the price formation method of the market. Market suppliers and demanders, sellers and buyers will aim to find a price that both parties accept and creating an equilibrium quantity. So let us take it to our field of markets. So what is market structure? Market structure, as we've seen from Wikipedia, is the combination of it's what happens when buyers and sellers agree, and in that they create a price, and in time, price creates market structure. And for us, our definition of market structure is it's what happens when liquidity, momentum, macro analysis, and correlation combine to create what we call the market structure. For us here at Black FX Trading Limited, we use a system whereby we use fractals and Elliott waves to analyze market structure, because we believe and we understand that market is, as much as market moves randomly, it's still based on an underlying structure. And that is what we want to discuss today. So we want to see market structure uh, in how it develops and how it shows itself on the market. And we can analyze it using our charts. So today we have the Bitcoin USD chart, and we start with the 6 month chart. So as you can see, we are now in some sort of corrective, in sort of consolidation. And let us go to the 3 months. We also see in the 3 months we're in some sort of correction, and already we can see we can see there's some sort of market structure whereby there is yes, for the newbies, or what we say the retail, they'll say this is higher highs and higher lows. And but for us here at Black FX, we analyze the market in a different way. We see it in uh, as we said, we see through liquidity, momentum, macro analysis, and correlation. And all these four factors, uh, we can see them using our system of Elliott waves and a combination of fractals. But let us stick with Elliott wave for today. So, what is Elliott wave? Elliott wave is an analysis of a market analysis based on the belief whereby the market goes uh, in an impulse and correlative and correction wave. So we have two types of waves. We have the corrective wave and we have the impulse wave. So the impulse wave are made up of wave one, two. They're made up of wave one, two, three, four. Okay, sorry, let me do it. Yeah, we can analyze it. Okay, there it is. So, so here we have some Elliott wave. Yes, Elliott waves, as you said, Elliott waves is made up of wave one, wave two, wave three, wave four, and wave five. And the corrective wave is made up of A, B, and C, which forms like this: A, B, and C. Now, something unique about Elliott waves is that what happens here, the full five wave sequence also happens here. So inside wave one, we expect to see wave one, two, three, four, five. And inside wave two, we expect to see A, B, and C. So we shall go in detail later, but yeah, that's some of the basics of Elliott wave. And so when we analyze a chart like the Bitcoin against the dollar, you can see this that formation of impulse and correction, whereby we have wave 1, 2, 3, 4, 5, and then we have a correction. We also have another one here and a correction here. So what we say is, as much as there is randomness in the market, there is some sort of structure, and that structure is based on an underlying structure, and that is what we are stressing on about market structure. And having market structure will save us not only will not only help us make money, but it will also help us protect our capital, which is our main goal here, Black Apex. And yeah, let's go deeper and analyze this Bitcoin chart. Let us start with here, whereby we have full formation of where we have both the impulse wave and we have the corrective wave. So there are three rules that govern Elliott wave. Three main rules that, when followed, you're sure that you have the full wave sequence. So the first rule of Elliott wave is normally that wave two should never go below wave one. So as you can see here, wave two never goes below wave one. The second rule we have is that wave four should never touch wave one. And as you can see here, wave 4 never touches wave 1. And our third rule is that wave 3 should never be the shortest wave. And since all our three rules have been adhered to, then we can conclusively say that we have a full impulse wave. The same we have here for wave the corrective wave, whereby we have wave A, wave B, wave C, and we said before that this corrective wave, this is a smaller wave two, whereby if you go to a bigger time frame, let's say monthly, we can see that this is a wave two of some sort, and this is a wave one of some sort, and that's why we are saying that yeah, we have, even before making a trade, we have a rough idea of what the market is doing and what the market is and what the market is where what we say where the market, the location, or rather the time frame, the time where the time period where the market is. And when you have that, and we also have some more information whereby like whereby we should avoid the impulse wave. For example, wave four, the wave four, for those who trade Elliott wave know that wave four is the worst wave to trade. Not only wave four, also wave two. These two are, we don't say they're bad waves to trade, but it's that they are counter trend, whereby whatever happens in the trade, let's say, for example, if you trade wave two, it means you're going against the trend. So any person who's trading wave two or wave four is going against the trend. And these two waves are so important because they tell us where we are. For example, wave 2 tells us when we anticipate a wave 3, and wave 4 tells us when we expect a wave 5, or rather, when we expect the end of the full wave sequence. So the two waves are so vital in not only trading but also knowing where we are in the market structure. And so, analyzing this market, you can see that at the moment where we are, and you see we're in some sort of impulse, but you know, we always respect the higher time frame before we respect the lower time frame. And if you look at the lower time frame, you can see the higher time frame. You can see that as much as we are in a what seems to be an impulse wave, we can also be in a corrective wave. So we should be very careful because we might be trading a wave two or a wave four, thinking that we're anticipating a breakout. So yeah, that is what I wanted to talk about today, market structure, and yeah, we can analyze this as we analyze that one, whereby we take the three rules, whereby the first rule is that wave one never crosses wave two never crosses wave one, wave three is never the shortest wave, and wave four never touches the wave one price, and that is what we use to analyze this trade that is coming, whereby we are not sure if this is wave B or a wave one. So if you go to the weekly, you can see that we're in third, we're here. What we anticipate may be a wave two. We're in a wave two, but the only way we can tell is that if this price never goes below our wave C, then we can anticipate a wave three of some sort, or rather, like we know at the moment that we are not supposed to be trading in the moment because we're in some sort of a wave two, and as you can see, we're in some sort of correction. Our main idea at the moment in this Bitcoin is to ensure that this wave two never goes below what we anticipate or what we believe is a wave one. Yeah. So I hope I've been helpful to somebody somewhere. And if you want more details, more analysis of other charts, other pairs, deeper even into maybe Bitcoin, yeah, everything in. I have a free channel which all the details are there. The link is in the description below, and please subscribe, like, and share. And see you next time. Thank you.